When you drill down, it is clear that Spotify, it is firing on all cylinders. There is no bear case that I can find now. Their international growth was tremendous. Their business in Latin America, wow, I couldn't believe how strong. Southeast Asia, I asked the CFO about it, accelerated dramatically. India outperforming management's forecast by 30%. Spotify's been fiddling with its platform to improve subscriber retention. These changes are clearly working. How about the podcast business? Wall Street's been so skeptical. Spotify pointed out they're seeing exponential growth in podcast hours streamed, up 39% versus last quarter. Not last year, last quarter. Management adds that, and I quote, for music listeners who do engage in podcasts, we are seeing increased engagement and increased conversion from ad-supported to premium, end quote. That's the holy grail. Then they continue, quote, some of the increases are extraordinary, almost too good to be true, end quote. Holy cow. Finally, Spotify gave us more color on their two-sided marketplace initiative. They want to give up-and-coming musicians tools to help connect with an audience and develop their careers. Isn't that great? This could be a huge source of revenue, too, down the line. Management told us they'll have more financial details the next time they report. No wonder the stock caught fire on the news. The numbers were almost universally better than expected. The much-doubted push into podcasts is paying off in a major way. People love podcasts. And we all know there's positive catalysts down the road thanks to the two-sided marketplace initiative. So could this at last be the beginning of a longer-term rally for Spotify that I thought from the beginning but I've been wrong about? It wouldn't be the first newly public company that took a long time to find its groove. Hey, by the way, we saw the same thing happen with two of my absolute favorites in 2016 and 17, Okta and Coupa. It took a little while. Oh, but once they caught fire, wow. And you know what? And the same thing goes for Facebook. Big swoon, then monster rally. But once they found their footing, they gave you spectacular long-term gains. Oh, by the way, Netflix had its troubles, too, before it took the bull by the horns. You know who was one of the architects of that company's strategy of matching your tastes with your films in a predictive artificial intelligence fashion? The retiring Spotify CFO, Barry McCarthy, whom I interviewed on Monday. Oh, he will most certainly be missed. And I always think of him when we use Spotify at our restaurants. And it mind reads what our collective customers want, the bottom line. I think Spotify will be just fine. I think it's terrific. Company just reported a game changer of a quarter. And after that rally, the stock's basically back to where it was when it came public in a direct listing last year. And you know what? I know this looks steep. You ain't seen nothing yet.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.